This is video 1 of the category Financial Liabilities at Amortized Cost, and it deals with example 11. If we have a look at the given information, it says Amahle Limited purchases a 10% 1,000 Rand debenture on 1 January 2011 issued by Anika Limited, a company listed on the JSE Limited. So the investor is Amahle Limited. They would have a financial asset. It's still an investment in a debenture, but it would fall under the category financial asset at amortized cost. Now, in this case, they purchased a debenture, one. Anika Limited, which is the issuer, only issued one debenture. That does not always need to be the case. They can issue 100 debentures, 1,000, 500,000, 2 million, any amount of debentures. Then we see that this debenture is a 10% 1,000 Rand debenture. So the debentures are always called, like in this example, a 1,000 Rand debenture, or maybe a 500 Rand debenture, or a 12,000 Rand debenture, or a 250 Rand debenture, or a 20 Rand debenture. That is the debenture's nominal value, and another name for that is the par value. The 10% represents the nominal rate. Another word for that you can use is the coupon rate. So the 10% and the 1,000 Rand give investors an indication of the returns that they will earn on this debenture. So in this case, they will receive 10% per year interest on 1,000 Rand. In other words, they will receive 100 Rand interest in cash per year over the term of the debenture. So if you are calculating the return that will flow in cash in the form of interest, it is nominal rate times nominal value, 10% times 1,000 Rand. That percentage, that nominal rate, is always an annual rate. I don't need to say 10% per year. It is the annual interest that is linked to this specific debenture. Does that interest only need to be paid once a year? No. You will earn 100 Rand interest per year. That interest can be paid monthly, or every quarter, or 6 monthly, or annually. Doesn't need to be only once a year, but over the year you will earn 100 Rand interest. Nominal value times nominal rate is the interest that will be earned in cash. So this one debenture was issued by Anika Limited. They are listed on the JSE. The debenture can be issued either at the nominal value or the par value of 1,000 Rand. It can also be issued at more than the nominal value. Then we say it is issued at a premium, or it can be issued at less than the nominal value. Then we say it is issued at a discount. So in this case, the debenture was issued at 95. What does that mean? It means it was issued at 95% of the nominal value. That is less than 100%. That is not the full nominal value. That means it is issued at a discount. The sentence could also have read as, this debenture was issued at a discount of 5%. Because the 95 is 5% less than the full nominal value. So in this case, issued at a discount. A debenture has a very specific term, and at the end of that term, the debenture matures. It gets redeemed. The money is paid back by the issuer back to the investor. That is why a debenture is a financial asset on the investor side, because they have a right to receive money. And that is also why the debenture is a liability on the issuer side, because they have an obligation to pay cash. A debenture can mature or be redeemed or paid back either at the nominal value, which in this case is R1,000, or at more than the nominal value, in which case we say it is maturing at a premium, or at less than the nominal value, then we say it matures at a discount. Now, debentures can mature once off at the end of the debenture term, or it can mature in installments, and that can be annual installments, it can be 6 monthly installments. It depends on the terms and conditions of this specific debenture contract. Now, if we look at the given information, it says that this debenture that was issued by Annika Limited matures in 2 equal annual installments on 31 December, with the first one being 31 December 2012. So it was issued in 2011. At the end of 2011, there is no redemption, no maturity. The first time that happens is only in 2012, and then the next time will be a year later because it's annual installments. So that will be 31 December 2013. It matures at 110. What does that mean? 110% of nominal value. That is more than nominal value. That means it matures at a premium. We could also have said it matures at a premium of 10%, because it's 10% more than the 100%, which is the nominal value. Interest on this specific debenture is payable annually on 31 December. So only once a year at the end of the year.